This is a once-in-a-lifetime opportunity.
We're about to reveal why the next few months are so crucial to your financial freedom.
Welcome to the Bean Pod. This is your place for all things stocks and crypto. From beginner tips to expert picks. Use this as fuel for your investing journey, because when you're in the know, your money will grow.
This episode of the Bean Pod is sponsored by KyberSwap.
KyberSwap is a DEX and DEX aggregator which is built to facilitate all your DeFi needs in one single platform.
Fast, cheap, and safe.
User experience is KyberSwap's sole focus to make everyone's life better in DeFi. Welcome to the Bean Pod. This is Shane, aka the Jolly Green Investor.
And this is Josh, the Nifty Investor.
Today, we're going to be talking about one of the best opportunities you're ever going to have in your life.
These are terrifying. These are normal. They're inevitable, but it won't last forever. We're talking about the bear market.
It's a word that many people fear, and they don't want the bear market to come. But in this very important episode, we're going to tell you why this is something you need to embrace, because if you play it right, you could get financial freedom, right? That's right. This is a huge opportunity.
This is huge. And, we talk about financial freedom and, how much money you can actually make. And it's true if you don't try to time the market, you don't try to, short all the way down to the bottom and then you lose out on, a massive run and then all of a sudden you get liquidated and all this, right? So right now are when some of the smartest people in the world will dollar cost average into some of their best projects, into companies who have a strong balance sheet. They have recurring revenue, maybe some altcoins that are going to be with really good utility, great tokenomics. This is where you want to start putting some money into.
And if you just dumb it down to the simplest level of everything, it's the old saying, buy low, sell high. And if you think about entering a bear market, where will the prices be over the next year? Low. That's one of the definitions of a bear market. So if we're going to see low prices and you still happen to be in your younger or higher earning years, like if you're still making money right now, these low prices that you're going to see over the next 12 months is exactly what you want to see. You don't want to be buying the top of a bull market because you lose money. You want to be buying the bottom of a bear market. So if you happen to be in that golden zone of making money, this bear market is your best opportunity.
Very important. The Beanstalk, we like to analyze things from a long-term perspective. We're not day traders. We're out here swing trading. We're trying to help the listeners and the viewers piece together everything that's going to help bring the best chance, the best risk-reward ratio to see financial freedom in the future. It's not tomorrow. Don't go all in. You know what I mean? Like, these bear markets come around, and if you look at some of these charts, if you look at Bitcoin's chart, whether you grab a little piece now while it's at 23,000 or you buy a little bit when it's at 20,000, that's such a significant drop in a very short period of time, right? If you bought it at 23 and it goes down to 20. But if you look historically at the price increase that you will see in Bitcoin due to its reward system and the smart contract that it is, you will see significant rewards in a year from now and 2 years from now. But because we're in that bear market, now is the time to be accumulating what we just talked about.
100%. A bear market is a time where you have to have a long-term mentality because this bear market could last. What's the average length of a bear market?
So bear markets are short-lived, 9.6 months.
Right.
Versus a bull market, which lasts on average of 2.7 years.
Okay.
And this is important because according to what a bear market actually is, and that's marked, this is an arbitrary number, but this is what, it kind of depicts what a bear market is. That is a 20% decline from the all-time high when investors become more risk averse.
Right.
So they shun speculation. And hence, that's why we saw when the S&P falls maybe 5%, we see Bitcoin fall 15%.
Right. Because
Bitcoin right now is not regulated. So risk-averse investors are going to step away from that. So now that we know that a bear market is short-lived, on average of 9.6 months, and it began officially in June, we're already a few months in here, so there's not a lot of time left to really be, there's going to be some more fluctuation in price, but we only have another 6 months to really start grabbing some stocks and some crypto at some discounted prices.
Exactly. So when you look at the prices of some altcoins right now compared to where they were at the top of the bull market, so Bitcoin obviously topped out at 69K. It's at 23K as of today. If you look at something like Solana, which is sitting at $40 today, what did that top out? 200 and something, 260. We're talking about massive, massive discounts. And this is across the board in crypto and in growth stocks as well. So it goes back to what I said at the start of the episode. You want to be looking for these buy low opportunities. And then when the bull market comes, it doesn't matter if you bought Solana at 40 or 50 or 30 or whatever. If it is a strong project, which, by the way, if you want to find out, go check out our Truth About Solana episode. But if it is a strong project, it's going to go up so much higher than where you bought it in the bear market. And that's really where you make those 5x, 10x, 100x gains that you always hear about, right? Those are typically not made by buying at the top of a bull market. In fact, they're almost never. It's made by buying during a bear market. So this is why we're saying it's such an amazing opportunity.
It's funny, you just pulled up the Solana chart and, we'll try to get down the screen for you there. But when you look at how it's just been running sideways at such a discounted price for so long.
Yep.
If you zoom in though, on a short time frame, the fluctuations will look massive. It's like, oh my God, it's up 10% today. Oh my God, it's down 10% yesterday, whatever. But when you zoom out, fuck, who cares?
Yep.
That thing, not to say Solana will, but these projects and these stocks will rip again. The future's shown it over the past 100 and some odd years.
100%. So in terms of taking advantage of the bear market, we've already said we think this is a great opportunity. If you're making money right now, this is exactly what you want to see. So one of the best strategies that we talk about on this channel all the time is dollar cost averaging. So for example, if you want a dollar cost average over the next 9 to 12 months, however long you think the bear market's going to last, say for example, you want to invest $1,000 a month into 5 different positions. That can be stocks, crypto, a mix, or whatever. So $1,000 a month broken down into 5 positions is $200 a month per position. Now you break that down over 4 weeks in a month, you're investing $50 per position every week.
Right.
And that's important for dollar cost averaging because you don't want to invest once a month because you're not maybe catching the lows and the highs, right? I think a week is decent. If you can do it more than that, it's maybe a bit too much work for you. But if you're putting $50 into each position a week during a bear market, you're going to be catching some great prices. As you said, volatility in the short term can seem extreme. But then when you zoom out on these investments in 2-3 years, once we're back in a full-fledged bull market, your dollar cost average plan has paid off in spades. 5x, 10x, 100x if you pick the right gems, right? So that's why I would encourage everyone to plan this out, see how much money you can set aside from your earnings to invest, pick your positions now, and just make that plan and stick to it. I know it's easier said than done, right? You want to go all in and stuff, but these are proven strategies over a long period of time that work.
So I'll speak to 2 personal experiences when it comes to the crypto side of things and where this has worked out well for me and where it hasn't. So my 2 first cryptos was Bitcoin and Ethereum. I saw Bitcoin as this new technology and all that stuff. But so I bought 2 Bitcoin, right? I just said, boom, all in. I'm just going to buy 2. Then it went on this meteoric rise, came back down a bit. I sold. However, with my Ethereum holdings, I had a recurring repayment system. I bought X amount of Ethereum, $200 worth of Ethereum every 2 weeks. I did that for like 8 months. So I just kept buying. So I'd get it at like $300. I'd get it at $400. I'd get it at $1,500. I'd get it back down to $200. So it ended up averaging out, and I ended up making 10x what I put in over that period of time versus my bulk buy of the Bitcoin, which didn't really equate to like the serious gains I saw in my Ethereum. So the DCA, the dollar cost averaging approach, actually worked out much, much better for me in the long run. Now that we're in, when I sold a lot of it in 2020, once I hit 5K, I was like, okay, I'm up so much. Now it's time to take some out. Mm-hmm. So, but that's from personal experience. And I found that to be like super helpful, what you just alluded to.
Yeah, 100%. And I can't drive this point home more or enough. It's that you have to make your plan and you have to stick to the plan, because investing psychology is very tricky and you're going to see a dip and you're going to want to go all in. but that might not be the bottom of the dip. So if you've gone all in and then you have no more money left to dollar cost average, which is by bringing the average cost of your investment in a particular position up or down, then you've missed that next dip, which if you were dollar cost averaging every week, you buy the dip even more, you buy the dip even more, it comes up, you keep buying more, and then when it sees that upswing, all of your buys are in profit.
Yeah, when the meteoric rise eventually does occur.
Exactly. So that would be one of my recommendations, is to make that plan, write it down, put it on your computer, and just try to stick to it. And if you're wondering what positions you want to add, stocks or crypto, like check out the Beanstalk Discord. We're always uncovering altcoin gems, what stocks we think are going to do well. So that would be a good place to start as well.
So here's some crazy stats to kind of back all this information up. So stocks, so just again, for any new listeners or viewers, you guys know this, right? Or any previous listeners know this. The reason we talk about the stock market in addition to Bitcoin is because Bitcoin follows the S&P and the stock market. So you need to analyze what the stock market's doing to figure out what Bitcoin is doing, and whatever Bitcoin is doing affects all the altcoins. So this all comes hand in hand, right? So on average, stocks will lose 36% in a bear market, but they'll gain 114% in a bull market, right? So dollar cost averaging now, even if you bought it like down 20%, down 30%, but you're about to see this 114% rise, so it's worth it. There's been 27 bear markets and 27 bull markets since 1928. Look at the S&P. It has been on a continuous rise since the dawn of time.
Yep.
Right? So that is why you really want to be dollar cost averaging during these bear markets. This is what's really important. Half of the S&P's strongest days over the past 20 years occurred during a bear market. Half. That's 50% of the S&P's strongest days. The other 34% of the market's best days came during the first 2 months of a bull market before it was clear that it was a bull market.
Right.
Right? So we've just uncovered 84% of the best days occur at some point during a bear market.
Yeah.
So exactly. So we get a bear market relief rally, but is it the start of a bull market? Well, if you're dollar cost averaging, you haven't missed out on it.
It's all these things point to dollar cost averaging through a bear market is by being one of the best and generational opportunities, right? And, this bear market might not turn out to be the same as the others. We've got a few other different things going on in the macro environment, but sticking to that DCA plan, I don't know how you can really go wrong. It also takes a lot of pressure off if you're trying to trade and you're trying to time bottoms and short the tops and all this kind of stuff. It's very, very difficult, and it'll tax your mind. If you're not in it full time like we are, you can't do it. But even when we're trying to do it, sometimes it's just better to take a step back, do the dollar cost average, and just wait for the bull market or, these bear market relief rallies, just like we've seen. We've seen a lot of really green days. If you'd been dollar cost averaging since June, you've already seen a big rise in your holdings because we've had this relief rally, right?
That's right.
So there's a lot of things that are proving this thesis to be correct.
Yeah, absolutely. So here's another little crazy fact. Bear markets, they're obviously painful, right? Like we feel them, we remember them, you get scared, but that is the best time. Markets stay positive a majority of the time. Of the last 92 years of market history, bear markets comprised 20 years worth of that. But let's put this into perspective. They are on the rise for 78% of the time. So the market is on the rise for nearly 80% of the time.
Right.
So that it's so important. I think our biggest thing that we're hammering home here right now is dollar cost average during this bear market. We know we're in one.
Yep.
We're going to see some small fluctuations coming up here. But hey, if you're a long-term investor, if you see the future of blockchain technology, if you see the future of, Microsoft or Facebook or Meta or whatever project or stock company that you've done your research on and you are passionate about and you see the future of it, right now is the best time.
For sure. So now let's take a look at some specific things that are going to happen over the next, say, 9 to 12 to 15 months for the crypto industry in particular that might make this bear market even more of an opportunity than the previous ones. First off, we have the regulations. We've always said on this show that regulations are long-term bullish for crypto. We want regulations to come in because then trillions of dollars of institutional money, governments, corporations, billionaires, they can all start to really get into crypto. And these regulations might start to creep in over the next year during a bear market. So when sentiment is still low, things are being done in the background, which are going to make for an even more massive bull run after the bear market. So regulations for me will also unlock the spot ETF, which is, again, just going to bring more and more money into the market. So while people are, hating on crypto right now, no one wants to hear about crypto right now. None of our friends,
That's true.
No one's calling us, asking us about crypto right now. But there's things that are being done in the background at the regulation, the federal level around the world that could make this much more of a crypto bear market opportunity. No one's paying attention. But when the bull market comes back, if these regulations allow, massive money could flow in.
Yeah. I mean, that was some sort of document you sent me today with the Canadian government doing something.
Yeah, that
looks like a form of regulation.
It's coming, man. It's coming. Like it's creeping in, and they're doing it now. It's well timed for them because no one's looking.
Yeah.
No one's looking
Sliding
at the crypto
it in.
market right now. Yeah, 100%.
Well, you had BlackRock also introduce, I guess, was it spot ETF, spot Bitcoin buying for institutional investors?
The BlackRock one?
Yeah. Yeah. So it is happening.
It's all happening.
But obviously it's going to go to the wealthiest individuals first.
There's one important point I also want to clarify for crypto bear markets and the trends. Although, crypto is obviously fairly new. We haven't had that many bull markets and bear markets in crypto. But there's a couple of trends that I've spotted that you need to learn about. So the most important one is that the top 20 cryptos from each bull run, they always change. So you might think after listening to the first part of this episode, all right, I'll just take Solana, Cardano, Avalanche, Polkadot, and Ethereum and Bitcoin and, pick the top 10 cryptos, dollar cost average into those. They're going to surpass their all-time highs in the next bull run. That doesn't actually happen.
Oh.
The top 20 cryptos always change. And many of the members of the top 20, other than Bitcoin and Ethereum now, they'll never get back to their all-time high that they found in the 2021 bull run. What a smarter strategy is to be uncovering these hidden gems. Some projects that haven't launched, like say Otherverse, they could be the darlings of the next bull run.
True.
Or projects that launched in this bull run but never saw a massive hypey run up because maybe they hadn't launched their mainnet or they just never got any exposure, like a Mina protocol. So that's what we're doing, and I think that's what one of our specialties is finding these hidden gems that didn't pump as much during the 2021 bull run that could be the top 20 or top 50 in the next bull run. Right?
Yeah, that's a valid fact, especially because some of these companies might be spending most of their time on development and not marketing. And then once the marketing hits, that's when you start to get all these eyes on the project. That's when money flows in. That's when the price flies. Right now, they're just building.
Exactly. They're just building. And every bull market in crypto comes at a different time in the world. So trends are always different. This bull market, the trends were NFTs, play to earn games, metaverse kind of got in there as well at the end. But in a couple of years, when crypto is trending again in 2024, say, what are the trends going to be? And we made an episode exactly about that.
Yeah, that's right. So we had like some security and privacy and a few others, but you're going to have to check that one out.
Yeah, there's some hidden gems on there. So if you're thinking about looking forward to the next crypto bull run and what trends are going to be trending then and not now, check that episode out. We'll link it after this one.
It's been a lot of hacks. I posted something on my Twitter account. There was an increase, 60% increase in hacks this year. It was like $2 billion in the crypto industry so far.
Crazy.
And I'm like, crypto is literally just money. Like it's money transferring around. And like, yeah, there's utility to some tokens, all this stuff. But like, shouldn't hack mitigation be like the number one thing that you're trying to stop?
Yeah, there's got to be some work done there. For
you know
sure.
what I mean? It's incredible. It's like every day, hack. Holy shit.
And it's one of the main things that prevents people who aren't in crypto from getting into crypto because they see people getting hacked, people losing all their money.
Exactly.
Or they say, I don't want that. I'll never get into it. So once it becomes a little bit more secure, and I know everyone says, decentralized everything, custody everything. Well, there's a middle ground there where there is some security as well. So I hope that that's going to be one of the trending things for the next bull run. So we've got some hidden gems for that as well.
Yeah, that's what I'd like to see. I'd like to see projects stop focusing so much on the transactions per second and the speed and all this shit because, look, there's not enough people using these platforms yet or these projects. So just chill out with your speed and work more on the security.
Yeah, for sure. That's why we alluded to that fact in our Truth About Solana episode.
That's right. Yeah, we did.
Yeah, for sure. So, I mean, looking back at it, the bear market is a massive opportunity. If you can create that plan and stick to your dollar cost average, over the next 9, 12, 15 months, whatever it is, I feel like that's what I'm going to be doing. I think it's what you're going to be doing. I think that's what we would recommend to be doing. Of course, we're not giving any financial advice. You got to make the decision yourself. But, we've looked at the data. We've looked through the past bull bear market cycles, all that kind of stuff. The opportunity is here. If you're making money, you want to see low prices, and we are seeing low prices, bottom line, right?
Yep. Just remember, the short-lived bull markets are long-lasting. We will be back on top again. Right now is an excellent opportunity. So make sure you guys tune to that next episode,
because that one's going to be a fucking banger.
All views expressed by speakers on the BeanPod are solely their opinions. You should not treat any opinion expressed on the BeanPod as a specific inducement to make a particular investment or follow a specific strategy, but only as an expression of their opinion. This podcast is for informational purposes only.